Cramer. Welcome to Mad Money. Welcome to Cramerica. People, my friends, look, I'm just trying to make you a little money. My job is not just to entertain, but sometimes to beseech you and certainly to educate you. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. Sometimes I just get steamed. I mean, really upset with my job and with myself. I get angry because I can't convince people to avoid making mistakes with their stocks. Very specific mistakes that have historically kept you out of enormous gains. So tonight, with the Dow gaining 72 points, S&P advancing 0.32%, NASDAQ climbing 0.53%, what a market. I want to talk my book. Yeah, I mean, actually, How to Make Money in Any Market, which comes out at the end of next month. Because it is in large part about what happened to the stock of Nvidia and friends over the last 24 hours. See, my thesis is simple. Good things actually do happen to growth stocks. They do. You got to accept that. You got to own it. And you have to trust the market itself. Because if you do, you've been able to make a ton of money in the past, not just with the S&P 500, but with individual stocks. If you don't trust stocks, you miss out on enormous gains by trading in and out, like everybody seems to tell you. Constantly buying high and selling low.
They know nothing.
That, not investing, is the real sucker's game. How many of you would have made millions of dollars had you not been talked out of owning quality stocks? Oh, I bet there are a lot of hands just shot out there steaming. Which brings me to the greatest stock that I've ever laid eyes on. My best pick ever, Nvidia, and its wondrous CEO, Jensen Huang. First, let's zoom out. Nvidia nominally makes semiconductors. What it really does is make devices full of hardware and software that allow for really fast computing, powering programs that can answer questions rapidly, and will eventually, most importantly, be able to reason, actual long thinking and problem solving. Read last night's conference call. You know what I'm talking about. Now, the uses are myriad. You can build factories much better than you do now. You can create robots. You can power autonomous driving. You can infer purchases. You can design everything from advertisements to drugs. You can stop crime. You can save fortunes. You can change the world. Think of NVIDIA's platform as part of a thinking factory where you input thoughts and outcomes answers. Who knows what that is worth? Right now, we know you can go to ChatGPT or any Perplexity, I don't care, you go Grok, and ask it all sorts of questions. Terrific, right? Like who's on the cover of People magazine this week? Really fabulous. It'll come up with answers. It'll summarize things. Read a lot of different papers, not some that are up behind the paywall, but it'll give you a lot of stuff pretty quickly. It can even write code for you. Wondrous in itself, I guess. Sometimes the chatbots are wrong. Too often, actually. How wrong? Maybe so wrong that an outfit like Apple doesn't even yet want to trust generative AI to be worth anything to their customer base. Maybe so wrong it can recreate documents, but it can't explain what's actually in there, so it can't tell what's wrong. You know what, though? That's why this is such a big deal. This is why I'm trying to teach this stuff to you tonight. That's about to change. Top of mind example. Let me give you an example because it's in the news. Everyone's talking about Federal Reserve Governor Lisa Cook. OK, she's suing President Trump to prevent him from firing her. She's working with what's called a high-powered lawyer on the case. High-powered lawyers, what do? They cost a lot of money. One of the reasons they do is that they bill by the hour. You end up paying a fortune for their myriad associates to look up lots of different cases and laws to help lead the attorney the right way. Right now, NVIDIA-powered artificial intelligence isn't all that much help to a law firm. But within the next iteration, though, the machine will think and will reason and probably do a better job than the associates at understanding the case law and knowing the precedents. You can keep an associate or two around as opposed to, say, the 30 or 40 that you can just let go. You know why? Because they won't know as much about the law and the cases as the machine that's powered by NVIDIA's next generation Vera Rubin. Vera Rubin chips will know more than all the associates combined. So how big could this market for genuine thinking machines be? I don't know. According to Jensen, it's $3 to $4 trillion in 4 years. NVIDIA could triple its revenues from these new chips. I don't want to sell a stock of a company that's reinventing the very concept of work. I don't want to stand in the way of a revolution led by Jensen Huang. I want to be skeptical, but not cynical, and certainly not, as I see so many people here, nihilistic. Now let's zoom back. Okay, our job, meaning your and mine and all the other people interested in stocks, is supposed to be finding the ones that can go up a great deal, making us the most money. That's what this is about. It's not an exercise. This is not a classroom. It's an exercise in how to make money. I think the market that Nvidia dominates is the biggest in the world. If Nvidia were a software company like Microsoft or Google, we'd be comfortable with paying double the $4.3 trillion that the business is currently valued at. Why? Because we've been trained to pay up for software stocks, especially enterprise software. It's okay. We pay outrageous prices to earnings multiple for them. We're thrilled with that. But we have a much harder time thinking about Nvidia that way because it's a semiconductor company. I say get over it. There have been times when the oils were the biggest companies out there, times when Apple was the biggest because it had an iPhone. The opportunity for Nvidia, I think, is in many ways more enormous than any of those. It's certainly worth $4.4 trillion. But if the company executes as it has, then its valuation could double from the $4.4 trillion it trades at right now. And I wouldn't mind paying that price. All right, so 4.3. What do you want me to do here? I wouldn't mind paying that price. I say get over the mental steeplechase. You will make much more money if you do. You may not have heard it said like this, but last night, Nvidia reported one of the most amazing quarters ever, with more than 50% growth. All I heard, decelerating growth. What planet are these people on? Decelerating growth. What are they thinking? The quarter was insane. And it was done during a period where they weren't even allowed to sell into the second largest market on earth, China. You heard about that enough times. Some were upset with their growth and sold the stock, even though tomorrow the president could arrange for Nvidia to sell its chips in China, take a 15% cut for Treasury, part of a prearranged deal, and Nvidia would be up, 10 to 15 points? CEO Jensen Huang and CFO Colette Kress, who really runs the call, know better than to speculate about when this could happen. But the freak out about it was nuts. There were other people who said that demand for Blackwell, the current AI chip, was slowing. But I don't know. I don't even know how this stuff happens. Still, others say that NVIDIA's customers don't see the value and don't want as many chips as they used to. Well, yeah, maybe the stupid ones. See, there's no evidence of that whatsoever either. Maybe I'm making it up. Maybe this morning I got up and said, you know what, we're not going to do that. I'm going to tell a lot of lies, get a lot of people out of NVIDIA. No, I don't want to do that. That's not my job. My job is to help you try to make some money. But the skeptics, they're more powerful than I am. They sound so smart. They probably went to better schools Friday. No, maybe not. Who can tell anymore? They will you to sell the stock. It's their job. They see it. Get these people out of NVIDIA, the greatest performing stock of my lifetime. It has not made many people, people should have made millions off this darn stock, but no, they were talked out of it by people who come on and say, sell. The skeptics have been too powerful. They never stop scaring people away. They are your worst portfolio nightmare. Unfortunately, I am helpless against these people. I am a TV journalist and former hedge fund manager who spotted this stock when it was $2. But do you think I have any gravitas with these negativists? The only reason I got any traction with this company is because 8 years ago I renamed my dog Nvidia. Well, isn't that saying something? The skeptics always prevail. Well, almost. Which is very odd today when you thought that in Nvidia's orbit, Broadcom was up, Amazon was up, Microsoft was up, Alphabet, they were all humming. Which brings me to the greatest oddity of all. Do you know that because of the skepticism about Nvidia, especially the corrosive pessimism about the market in general, Nvidia stock now sells for a cheaper price to earnings multiple than the average stock of the S&P 500? People just don't believe in the coming AI revolution, and they don't believe that Nvidia, formerly a simple gaming company, can lead it. They believe it can't possibly be worth what it's selling for. Me? Look, when Jensen Huang and his team, when have they ever led me astray? Why the endless skepticism and defeatism about this company? Why? Why does it deserve such cynicism? No, why does it deserve such opprobrium? So here's the bottom line. If you can't fathom NVIDIA, or you are thinking that it's all too good to be true, or that your host has lost his critical faculties and is doing some magical thinking, then feel free to sell this wondrous stock. But if you trust Jensen and agree with a person who's been right as rain on this one, as opposed to the critics, then you should own, not trade, the stock of NVIDIA, even from here, because I think you can still make a lot of money investing in this fabulous company and its remarkable visionary leader. Todd in California. Todd.
Hello, Mr. Cramer. Thank you and Sean from your team for all the great work.
They're great. Our team is good. Congratulations, Ben Stoto. I'm going out to see him get married. He works on the show. He's the research director. He's a dynamite guy. And I like the fiance, too. I know. I kind of introduced them each other in a peripheral way. What's happening?
I had called in a couple of weeks ago to ask you about some healthcare stocks that had gone down so much due to policy uncertainty and federal investigations. At the time, you had said wait until after they reported. And now that they've all reported, and as the company with the least exposure to Medicare Advantage of all the managed health care stocks, what do you feel about Cigna.
I'm going to take a big monster pass on Cigna and suggest that you pull down some CVS. Yes. Because I think the old consumer value stores, by the way, I think CVS is crushing it. And I think this guy, David Joyner, Mikasa Sukasa David Joyner. What does that really mean? It sounds good. Okay, now listen to me. If you trust what Jensen is saying, and I don't know why you shouldn't, then you should own Nvidia and not trade it. Because I still think it can make you a lot of money. On Mad Money tonight, CrowdStrike soared today after the street changed its tune on the cybersecurity leaders from last night when the bozos sold it down because they didn't know what to do. I don't know why they sold it down. I don't know. I mean, they went to college to get stupid. That's why. All right, I'm sitting down with the company's CEO to see how the company's positioning itself for the second half. Then Axon has given up most of the gains after reporting another solid quarter earlier this month. Maybe it's setting up for real buying opportunity. I've got the company's best. And Gap is trading lower after the bell. What's that about? Hey, maybe tariffs? I don't know. We'll get to the bottom of it no matter what. So I need you to stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Often gets things wrong during earnings season, but sometimes it self-corrects pretty quickly. Take CrowdStrike, the cybersecurity play that we own for the Travel Trust. Last night, CrowdStrike reported what I thought was a very good set of numbers. Aside from a slightly soft revenue outlook for the current quarter, everything else was just terrific. Yet the stock plunged in after-hours trading to the point where we told members of the CNBC Investment Club, buy. Didn't even wait, just buy. Sure enough, after opening down hard this morning, CrowdStrike came roaring back, finishing the session up more than 4% and was the fifth best performer in the entire S&P. So can it keep climbing? Let's take a closer look with George Kurtz, the founder and CEO of CrowdStrike, to learn more. Mr. Kurtz, welcome back to Mad Money.
Great to be here, Jim.
Okay, so George, I was pondering about what really happened last night, and I'm thinking that something you taught me was that you need to look at the annual recurring revenue. That's the best indicator of what's going to happen. I now learned that not only should I look at that, I should also be looking at new annual recurring revenue. And can you explain to people why that was the key metric and those who sold maybe didn't understand what the importance of that was, new net annual recurring revenue?
Yeah, well, the health of the business is really judged by annual recurring revenue and net new annual recurring revenue, which exceeded expectations by many multiples of millions. So this is the first quarter since our outage that we've accelerated now net new ARR a quarter before we actually said we were going to do that. So an incredible performance by the business. And I think when you look at ARR, that's a forward-looking indicator of what's happening in the health of the business. Revenue is a rearward-looking indicator, and there's some customer commitment packages and partner rebates that impacted revenue and impacted the revenue guide, if you will. And you have to understand the accounting of that. That operates as a contra to your revenue, meaning it's a deduction. So those are temporary in nature, and what you need to look at is annual recurring revenue. And one of the things that we actually put out very prescriptively, our CFO did, was that in the back half of the year for the next 2 quarters, we're looking at 40% growth in annual recurring revenue, which is an incredible feat and stat. Yeah. So we're confident on that and put that out there.
Yeah, I mean, even the most bullish people are looking for 35%. Another thing I thought of is that when you did the customer commitments, you did a lot of them that are going to roll off, that you did them in the next month. So, I mean, the idea that we could see multiple win after multiple win after multiple win from things that you actually, I'm going to say gave away because you wanted to keep your customers happy. It turned out to be, it was by far the best policy is the way I look at it.
Absolutely right. You know, Jim, working with customers and even partners, I think we were very strategic, smart, and did the right thing for everyone. And ultimately, it's going to be a win-win for all parties. We have customers that are now using our technology. Yes, we gave it to them. But those customer commitment packages begin to roll off in Q3, Q4, and then subside, in the following quarter. So the whole idea, though, is when people use our technology, it solves real-world problems. It's sticky. And in general, if someone is using our technology, we have a 95% chance they're going to renew it. and move forward. So we feel confident about that. And I think that also bolsters our outlook for the second half of the year.
Okay, now I always like to learn from you, George. And you made this point, and I really got to understand it, and I want our viewers to understand it. Technologies mature very quickly, you said. What does that mean for those who fail to innovate?
Well, you have to innovate. If you look at where we are today, and I've said this a few times, so I might be repeating myself, but security parallels the slope of the technology curve, meaning the more complex technology gets, you have to have security follow that. So in general, if we believe, and I do, that technology is going to be more complex in the future and you're going to have more AI, then by necessity, you're going to have more security. And you have to be able to be on the forefront of that and drive innovation. And that's what we've done with our integrated Falcon platform. It's integrated, it works, it solves real world problems of stopping breaches, driving down cost, and lowers complexities for customers, which is why you see such an increase in things like our Falcon Flex licensing models.
Now, you have a big conference coming up in less than a month. New products going to be available there? Or talk about things that you've done right or that you're going to do right? What do you got?
Well, I'm excited about the announcements. We've got to leave a little bit to the imagination until we get to that day. We don't want to spoil any surprises, but we've been driving innovation in this industry since I started the company. Customers provide the feedback that we need. We're delivering. And I think stay tuned because there's going to be more really interesting announcements in mid-September.
Well, how about this announcement last night about Onum, autonomous intelligence at the data source? You kind of slipped it in there, but it's a big deal.
It is a big deal. It's a very strategic deal. And Jim, one of the things that I talked about in the conference call was our next-gen SIM business, right? And that data is the lifeblood of a security platform. And we're in the throes of this agentic SOC transformation, which we're really pioneering. So when we think about Onum, it's a pipelining technology. The simplest analogy I can give you is if you own the railroad, you can move the data from one place to another. This is equivalent to owning the railroad. We can get the data from wherever it is into our Falcon platform, and we can drive down the cost for customers, and we can make SIM transformations faster and easier, which means we're going to take customers off legacy products and put them on our next-gen SIM, which we put out a stat, grew 95% year over year. So very strategic. And if you own the pipeline, you're going to own the SIM market. And this is why this acquisition, folks may not know much about it, but it's going to be very strategic for us in this space.
Now, George, I felt at some point when I was going through the conference call and then listening to you and then looking at some of the notes, I said, you know what, maybe George is doing something much bigger than any of us realize. Maybe when you want to start a new company, maybe you call them and say, listen, I want to build it on a CrowdStrike platform. Would anyone do that?
You know, Jim, it's actually we're doing that today. We have something called the CrowdStrike Falcon Store, and it's a marketplace. And essentially what we've done is we allow not only customers but partners to build their own apps on the platform. It's called Falcon Foundry. And a true mark of a platform is that you can actually build upon it. Think Salesforce, you can build upon it. Think some of these other platforms. And that was always my goal when I started CrowdStrike, to be that Salesforce of security. So we have partners that are building, using our agent as a service, and taking advantage of the broad distribution that we have. And that's a monetization area that we've yet to tap.
All right. Last question for me is, have we had any agentics been hacked? I mean, are there some agents that are doing things that you just never thought would happen, and companies realize we got to slow down here, we got to bring in CrowdStrike?
Well, absolutely. If you think about an agent, it's just a superhuman, right? It has access to data. It has an identity. It has access to workflows. It has access to systems outside the corporate network. And those need to be protected, and they need to be inspected and to have the right level of compliance. When we think about AI security, something called prompt injection, which means you ask questions in a certain way, and the model gives you answers that it shouldn't be giving you. In fact, there was a recent one in the Microsoft environment where if you received an email, Copilot would actually give you answers back that it wasn't designed to give you. That's since been fixed, but those are the kind of attacks that we've seen out there. So we're in the early innings of that. I think we're in the perfect pole position to be able to secure all of those AI agents in the future.
Well, I have to tell you, I think that you've been very transparent the whole way that this could happen. Over and over again, you've come on and said, we're going to get it. And the only thing that happened was that it was accelerated, and it was much bigger than we thought. I want to thank you, George Kurtz, founder and CEO of CrowdStrike. Hey, what can I say? Congratulations on a quarter that sent the stock down 30 and then sent it up 60. But it should never have gone down to begin with. Thank you, George.
Thanks, Jim.
Everybody's back after the break.
Coming up, could this provider of law enforcement tech give a jolt of energy to your portfolio? Cramer's got the CEO of Axon. Next.
Let's talk about the incredible run in Axon Enterprise. That's a company formerly known as Taser, but now it's so much more than that, especially, for instance, body cam for the police, evidence management software, which is something we're going to talk about tonight. Over time, Axon has steadily worked its way higher, with the stock now up, I'm not a typo, 830% over the past 5 years, because it just keeps delivering great numbers. We saw the same thing earlier this month when the company reported another terrific top and bottom line beat, driven by strong demand for the new products, with management also raising their full-year forecast. In response, the stock jumped over 16% the next day, but it's getting back a chunk of that. Hey, maybe this could be the big buying opportunity. Let's check in with Rick Smith. He's the founder and CEO of Axon Enterprise, who has always shared everything with us. Mr. Smith, welcome back to Mad Money.
Hey, Jim, it's awesome to be with you.
Oh, thank you, Rick. Rick, I'm on the call, right? And I hear that you have just closed almost $150 million of bookings from the AI Europe plan, and that you are doing bookings growth in the high 30% range. That is the highest I have of any company. How do you keep doing it?
Like our team just keeps delivering fantastic products. We acquired Dedrone. We're in the counter drone space now as well. Our platform services, which is basically VR and counter drone, was up 86%. Our AI bookings are growing at like a 500% clip. And I want to be specific that we booked about 100 million last year, and we booked almost 150 million last quarter. So we're just seeing growth across the entire ecosystem.
I was thinking about you when I read an article about the anti-drone back in August 4th. And I said, geez, I would think that the Defense Department would be there. You can correct me if I'm wrong, but you may be ahead of the Defense Department when it comes to countering UAVs. Can you tell us what happened in Ukraine, what you learned, or what you taught?
Yeah, I mean, Ukraine is just an incredible, the entire country is a startup that's fighting for its survival. And I went there personally a few weeks ago to check in. We have hundreds of counter-drone sensors across the country. I met with many of the tech leaders across, many of the companies there. And, we're learning a lot. I think the world is. We saw the Ukrainians destroy a sizable percentage of Russia's strategic bomber fleet with $1,000 drones. So, yeah, everybody around the world is very interested in counter-drone, not just militaries. Like if you operate a power plant or you're protecting an executive's home. I mean, literally anything of value is now subject to drone risks. We just saw police in Colombia, I think this week, lost a Black Hawk helicopter to a small FPV drone. So it's a really important space, and we're one of the world market leaders.
Now, is it something I should be focused on in addition to body cam, in addition to the AI that saves so much time and money? I kind of feel like that Axon has become this conglomerate of defense and offense, and I got to follow every part of it.
Yeah, I mean, it's a lot to wrap your head around, but we're not we're not doing disconnected businesses.
Right.
Every piece of the puzzle that we get into has got to become more valuable as part of the ecosystem. And that's, it's pretty magical that when we launch new products, they're just way more valuable because it works with everything else. So if you're a police running a real-time crime center and you want to be able to see cameras in a school where, God forbid, something terrible would happen, from that same platform, we can now show you drone activity and integrate feeds, across all the different pieces from our ecosystem.
Well, I also felt that we are seeing the president of the United States wanting to step up law enforcement in cities, and I understand that. But he's putting people, say, from the National Guard in. Now, they may not be as schooled as police, but boy, I'll tell you, they need these body cams. They're going to be accused of a lot of things that they might not have done. Can you help them?
Oh, for sure. Although I have to tell you, there's one thing that is a little frustrating. The guy who invented the taser way back in the 1960s did it because related to the National Guard firing live ammunition on college campuses during the Vietnam War protests.
He did it because of Kent State?
Yeah. Yeah, that was one of the driving factors that led to the original taser creation. And unfortunately, today, when the National Guard is deploying in cities, they still don't have taser weapons.
Well,
They're
that's
one of the
just
few
terrible.
folks that don't. So that's it puts them in a bad position. Look, if you're in the National Guard, the last thing you want to do is use one of your lethal weapons on an American citizen. So we're trying to work through to make sure that when we're deploying military units in the cities, right, they got to have the right equipment.
All right, thank you for doing that, because the whole country changed after Kent State, and the country just was divided. There's no need. We cannot have that happen again. How about in Europe? Where are they with your stuff?
We are extensively growing across Europe. I mean, I was in 2 countries, let's see, in the last month, where before I went there, I hate to say it, but I would have struggled to point out where they were on a map. So these are not the biggest countries,
right.
And we're working very big deals, even in smaller countries now.
Amazing. Now, the only thing you do so much that is so transparent, but you actually have a page where you actually talk about the hours that are saved. Because what happens is everybody says, yeah, I'm saving some hours. 11 hours when it comes to draft one, redaction assistant 10 hours, auto transcribe 6 hours. These are the actual savings, right? You can point to this and say, this is how we are saving money for our town.
Yeah, I mean, we want police out keeping our streets safe. And unfortunately, they've been bogged down just doing paperwork and data entry. And this is one of those things. Look, it's not the sexiest AI in the world, but automating bureaucracy has huge dividends in productivity. And that means effectively, it's like increasing a police force 50% effectiveness overnight, because those cops are spending more time on patrol and not sitting behind a desk.
Wow. I got to tell you, another great quarter. So much opportunity for you. I'm keeping this National Guard thing's in my head. We got to help everybody in this one, and I know you'll be the man who does that. That is Rick Smith. He's the founder and CEO of Axon Enterprise. He never talks about himself. I make him do that. He always talks about his team. I really like that. Mad Money's back after the break. Thank you, Rick.
Coming up, are these earnings better in denim? Cramer's talking to the CEO of Gap, fresh off the company's report. Next.
What's happening to the stock of Gap this evening? After the close, the retail chain that also owns Old Navy, Banana Republic, and Athleta reported what let's call it a mixed quarter. Gap posted a 2-cent earnings beat off a 55-cent basis. Revenue came in slightly weaker than expected. Same-store sales up just 1%. Some were looking for 2%. On the other hand, management looks like it's making real progress on the once ailing Banana Republic. But then management also forecasted problems with President Trump's tariffs. And I think that's going to be a drag on the company's margins. And I think because I said anything that's involving tariffs just gets people really scared. But you know what? The stock rallied after hours because the conference call was terrific. I loved it. Right now, Wall Street always seems to care about the impact of the tariffs on retail. That will not stay the same. There's some palpable signs of return here. Let's check in with Richard Dixon. He's the president and CEO of Gap. Get a better read on the quarter and what's next. Mr. Dixon, welcome back to Mad Money.
Thank you, Jim. Always good to be here.
So, Richard, I listened to the conference call, and I know some people were freaking out initially. But look, we know that the tariffs changed, okay? We know that they were fluid. We know it, whether it's Laura Albert, amazing merchandise with Williams-Sonoma. Urban Outfitters, it changed. Stock got killed. I understand it. Gap was part of that problem, too. But, in fact, there really wasn't – you couldn't control what happened with the tariffs.
Look, there are things that you can control and the things that you can't control. I think what we are representing is the things that we can control, we're doing really well. The team is doing a great job with our mitigation plans. We've been thoughtful in our adjustments to sourcing, manufacturing, assortments, and other actions. I think when you look at the quarter overall, what you see and what we're reinforcing is that our strategy is working and it's showing up in the results. I mean, we had another solid quarter. We over-delivered on our profit expectations, and we achieved our top-line goals. Comps up 1%. That's the 6th consecutive quarter of positive comps for us.
Yes.
Our largest brands,
Look,
Baby,
I remember,
Gap, Banana, all.
Before you got there, I remember nothing but negative comps. I mean, honestly, how quickly people forget what was happening before you came in. But I also know that this is one of the things I like about you. You recognize Athleta was dragging things down. You changed out. I don't know. You got a person from Nike who is a rock star, Maggie Gallagher. She is going to look at this situation and she's going to turn it.
I agree with you. We couldn't be more excited about Maggie. She is a proven leader in the active women's space for over 2 decades at Nike. She was most recently leading the North American women's business. She's only 3 weeks in, Jim, but I feel the energy. She's working closely with the team. She's assessing short and midterm opportunities. The brand is going to go through a reset cycle, but I really believe that this one could reemerge as a real purpose-led brand with great product, great trend, and great storytelling.
Now let's talk about what may really matter, because these things are zeitgeist and you understand it. There's an ad, cat's eye. You put on TikTok, you see it. The number of impressions are unbelievable. The people who are viewing this thing, they're in love with it. We have enough artificial intelligence these days that I bet you can even tell this is an actual needle mover for your company, isn't it?
Jim, this really does represent the playbook in action. It's working. This is just the latest example. Our Better in Denim campaign, which we just launched last week, as you called out, starring Cat's Eye, it's driving record-breaking responses for the brand. I mean, early reads on this one, it is in striking range, I'd say, of being one of the most iconic brand campaigns, certainly in our history, but out there overall. People aren't just watching it, they're actually actively engaging. It's suggesting that this is a cultural takeover, not just a advertising campaign. Denim story, everyone wants to be part of. We have social, full sororities are playing it back for us. And we have 20 million views we had in the first 3 days, over 400 million total views, 8 billion impressions. And get this one, Jim, we are the #1 search on TikTok. This is legitimately proving that Gap is a powerful pop culture brand. And this is what it looks like when we advance our playbook. And I'm telling you, there's a lot more value creation ahead.
Well, I think that this is part of what you talked about in the conference call. You're spending less, you're getting a lot more. I also know people have to understand Taco Bell, which people may not happen to like Taco Bell, but it was through this method that they became the #1 brand within first that group and then within the category. By the way, the big turn at Brinker, almost entirely driven by online. I saw this ad and I said, I've got to ask Richard, does he have early warning figures that perhaps you may have, like I saw on TikTok, people standing outside the store watching the video, pointing, and then trying to do the dance and teaching other people to dance, and they're always doing it in Gap.
It's extraordinary. When you really connect with culture, with authenticity, with the right creative asset, executing against our playbook in the context of what we can create, it's amazing and unbelievable. And I really do believe, as you've seen the sequential order of our progress, this is just another marked moment of the progress that we're making. One of the interesting stats is the unmute button has been the highest point of engagement on our site, connecting music with fashion, and as we've called it, fashion-tainment. This is a proprietary, if you will, methodology that we're going to be continuing to drive, and ultimately, we really do believe the value creation ahead is extraordinary.
Okay, so let's talk about the turn in Banana Republic. You told me it would happen. We are somehow, because of tariffs, we're not even paying attention to it. It's happening. It's real. You are doing it ahead of time. What's going on in those stores for other people to know? Because I know because I like their stuff so much.
I appreciate it. And we believe it's a sleeper in our portfolio. We've been working hard at reestablishing Banana in the premium lifestyle space. This comp, 4% in the quarter, really does reflect significant progress against that ambition. I mean, we've tightened up our assortment. We've refined our product aesthetic. We've enhanced our marketing campaigns. We've improved our service levels. We've worked on fit and function. We've found the right price-value equilibrium to drive consistency. As you know, men's has been performing well, but now I'm really pleased to see the women's piece start to align with that. We've worked on the bottoms piece of the women's business, which is really the gateway to wardrobe. So quarter after quarter, you're seeing clear signs that the brand is really coming together. And our Q2 performance demonstrates meaningful traction as the brand's reinvigoration takes hold. I am very excited about the progress that we're making on Banana.
Okay, one last thing. It's very hard because the president is very much his own keeper. But do you feel confident that where you are right now in terms of the charges will be the last we have to hear about these?
Things that are not in our control, I can't necessarily speak of what happened. But I can tell you, today's outlook for fiscal 2025 reflects both the strength of our execution and the continued brand momentum, as well as our view on all the headwinds from the latest trade policies. Our playbook is working. We believe and are confident and are committed to the cost discipline actions that we're taking. And we will drive a future proposition.
Down here, look, if it's at 27, it'd be a tough call. Down here, no, not a tough call. Richard Dixon, President CEO of Gap. Go watch, just turn on TikTok. You're going to see it in a second. Thank you, Richard.
Thank you, Jim, as always.
Bad Money's back. We'll be back after the break.
Coming up, Cramer takes your calls, and the sky's the limit. It's a fast-fire lightning round. Next.
Jim Cramer, the diehard of the dollar.
Hey, Jimmy, love the show. My 5-year-old grandson loves to watch your show.
I have to thank you for making us money when it's there to be made.
Our world is a better place with you in it.
It is time. It's time to live and President Rock Rose. Close Sam, the talk about I saw so much close ahead of time. My staff here where we play this out. And then the lightning round is over. Are you ready, Ski? Dad, time the lightning round. Cramer's brother. Let's go to Jim in Florida. Jim,
how you doing? Thank you so much for taking my call.
I'm thrilled you called in, Jim. I'm thrilled you're a club member?
Yes, I am. You better believe it.
Thank you. Let's go to work together.
All right, let's do it. So I'm originally from El Salvador, and I recently took, a small position on a company that I'm wondering, and I'm asking you to please guide me in the right direction here. I live most of my life in Jersey, Patterson, Randolph, Belmead, and so on. And I am married to a Cuban woman that I do not suggest anybody to please do. Nonetheless, my stock is APH.
Amphenol. Okay, this is an amazing company because it really, before we really got all excited about the data center, it was really just a kind of coaxial cable company. It is highly valued right now. It's in the high 30s multiple. I can't say chase the stock. If I owned it, I guess I'd hold it. That's all I can say. But thank you for the kind comments and the funny stuff. Let's go. I needed a little joke, Let's go to Tom in Minnesota. Tom.
Booyah, Jimmy Chill. Hey,
Booyah, man.
Thanks for all the knowledge you share with us every night. Love Mad
thank you,
Money.
buddy. Thank you.
You are the man, myth, and legend.
Thank you.
I'm calling in tonight about a stock that's been on a really nice run. It's a mid-sized position of mine. The ticker symbol EME. Should I buy
it's another data center-like company. It goes into a lot having to do with infrastructure. It's a good company. I'm going to say it's a little less valued, cheaper than Amphenol. I would hold on to the stock. I can't push it right here because it's had such a move. I feel like I've missed from the bottom. I've missed 200 points, and I can't just come out and say it's fine right here. I need to go to Roberto in Florida. Roberto.
Hello, Jim. Thank you so much for taking my call. Long time listener and fan of your show. First time calling on behalf of my teenage son, Nicholas, who, thanks to you, is really interested in the stock market and has a definite talent.
And you know what? He's going to be. I don't want to ever promise wealth, but he's got a much better shot at making a lot of money than almost everybody else in this country because of what you thought of. Thank you.
It's because of what you're teaching him. The question is this. We bought a few shares of this company before the pullback and a couple more during the recent pullback, averaging down to the low 160s. His question is, should he buy a few more and keep averaging down, hold or sell the company it's Circle, Jim? Thank you so much.
No, okay, thank you. The way you like to do this thing is when you have a high basis like that, you've got to wait till a substantial decline to be able to bring your basis down. I think under 100 would be the next time I would buy that. They're very proud people. They're never going to tell you, listen, our stock's not, is not worth 30 billion. But I've got to tell you, I need it to come down because I don't make a lot of money recommending companies that are losing a lot of money other than if they're nuclear or quantum. Okay? Now let's go to Gary in my home state of New Jersey. Gary.
Yes, welcome, Jim, to Morristown, New Jersey here. My stock is Rush Street Interactive.
Gaming. Oh, my God, it's gaming and it's doing really well. But, again, it's higher multiple than DraftKings, so I got to send you to DraftKings because it's cheaper stock. And that, ladies and gentlemen, the conclusion of the Lightning Round.
The Lightning Round is sponsored by Charles Schwab. Coming up, are signs of a slowdown showing up yet in the private sector? Cramer's revealing the data he looks at to keep tabs on inflation. Next.
Who's going to eat the cost of these tariffs? Now, we've heard from a plethora of retailers this weekend. It's the tariffs that are controlling their stocks, believe me. Put it bluntly, no matter how much a retailer might say, don't worry about it, the market remains very worried about the tariffs being passed on to the consumer because the consumer might balk at higher prices. At the same time, Wall Street doesn't love the idea of these companies eating the cost either, because that could crush their margins. These stocks trade on gross margin. So when you get what looks like a surprisingly good quarter from Williams-Sonoma or Urban Outfitters or Dick's Sporting Goods or Best Buy, and you look under the hood at what prices could be coming, sellers suddenly materialize and knock these stocks right down. It's painful to watch Williams-Sonoma get dinged. CEO Laura Alpert's doing yeoman's work trying to keep prices down. In the end, though, she's got a double whammy tariff issue. The current import from overseas and then the president's attempt to put additional tariffs on imported furniture to bring back our own domestic manufacturers. Now, in the conference call, Albert made the point that some furniture just can't be made here because we no longer have the capacity. She's thinking about some of the cheaper Asian products. But the market doesn't care about any of that. Meanwhile, when you look at the retail stocks that are winning, they're ultra-low price closeout operations like TJX, which had a magnificent quarter, or Burlington Stores, which offers stunningly low prices. These closeout chains have no real tariff exposure because they buy excess inventory from struggling retailers for pennies on the dollar. It's those struggling retailers that pay the tariffs when the goods arrive, not Burlington, okay, and not TJ. Now, there's a theme here. In order to encourage domestic manufacturing, Trump's slapping on tariffs all over the place. Wall Street's very clearly saying that tariffs will hurt sales and cause a decline in consumer spending. That's why Trump's so eager to get his own people in the Federal Reserve. He sees the slowdown fears and wants the Federal Reserve to cut interest rates in order to give the economy a boost against that. Does it make sense? To some degree, sure. The stock market's saying that the tariffs will generate a slowdown. The offset of lower interest rates could help, especially for anything that needs to be funded by a home equity loan. And that's why Home Depot stock has been rallying despite tariff pressure. I think the president might believe that lower rates could do the same for a lot of other retailers. There's only one problem. The uncertainty at this moment is not caused by job anxiety, as the labor market's fine. It seems to be caused by higher prices, whether they be from inflation, in the supermarket, say, or tariffs, or both. Lower interest rates won't solve that problem. If anything, rate cuts could make inflation worse. So how do you cut rates in this environment? The answer? You fire the Federal Reserve officials who are worried about inflation, and you bring in people who are more worried about a slowdown. Hence the pressure on Powell and the president's attempted firing of Lisa Cook. What's so strange about all of this is that the president doesn't have to lift a finger if he wants lower rates. Powell's indicated he's not averse to cutting rates as soon as next month. And besides, his term ends early next year. I think that Cook would go with the Fed chief here, too. In other words, the president will get his rate cuts either way. There's no need to fire any of these people. But understand, the market's saying the president's tariffs will be costing inflation, and it takes a compliant Fed chief to look the other way at too much inflation after he makes that first cut. Now, I know that most people rely on government statistics to aid in this kind of reasoning. I look at the stocks. Why? Because they're more forward-looking than the data. And these retail stocks say a slowdown's coming regardless of employment, but the slowdown's caused by the president's tariff agenda. I'm sympathetic to what Trump's trying to do. I am not a globalist. I'm probably tougher on this stuff than Trump. But in the short term, it's going to be inflation. That's part of you got to accept that. But that's why the Federal Reserve needs to cut rates slowly. Prudence dictates that course of action. And the best way to get prudent monetary policy is with an independent Fed. Honestly, Trump should want that too. The last thing any president needs is resurgent inflation. Just look at what happened to the last guy. I like to say, as always, bull market summer. I promise I find just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow.
All opinions expressed by Jim Cramer on this podcast are solely Cramer's opinions and do not reflect the opinions of CNBC, NBC Universal, or their parent company or affiliates, and may have been previously disseminated by Cramer on television, radio, internet, or another medium. You should not treat any opinion expressed by Jim Cramer as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his opinion. Cramer's opinions are based upon information he considers reliable, but neither CNBC nor its affiliates and or subsidiaries warrant its completeness or accuracy, and it should not be relied upon as such. To view the full Mad Money disclaimer, please visit cnbc.com/Mad Money disclaimer.